It is Sunday the 11th of November and I'm sitting here in Thailand about to start my video for the week. So we're looking at the US dollar index. I like to start on that just to try and give me some idea of where the dollar's been going or is going to go, although it's not been going anywhere recently. So over the last, coming up for 2 months now, we have seen this little recovery from September. So you could say that the bull trend is resuming, the bull trend which started in February. We had the very long pause all the way through the summer, right up until September. Now it seems like we're resuming it, although, of course, we did dump significantly in the first week of October. Recovered a little bit last week. The big question now is 97.20 is the high from October, so that's obviously the level that we're going to have to beat if we want to push higher and continue the bull trend. But if I show you the weekly chart, I'm just going to remind you that we do have this large rising wedge formation. Here we go, I need to zoom in on that. So the question is, can we get through 97.20? But the bigger resistance comes from the trend line at the beginning of the wedge, which goes back to October of last year, so it's just over a year old, and that comes in at 97.50. So failure to get up through 97.50, 97.55 would in theory see us turn lower, possibly to these. The first stop would be around 96.15, 96.00. You've got the peaks from this little trio of candles there, which almost matches the trough of this candle down here at 95, call it 96.00. And then you've got the 200 week moving average around 95.85. So that sort of 96.00, 95.85 area would be good support if we reject 97.50. If we start getting up through 97.60, obviously things are going to look more positive, or at least the bull trend can be said to be continuing. We'll be moving well away from that 200 week moving average. Got to get up through 97.87 to get up to 98.15. Those would be the targets that you can see that I've put on the chart here. So keep an eye out for those levels. What's the peak of this candle up here? 97.87. So that would be that ties in with the level that I put on there at 97.87. Australian dollar versus the US dollar. Okay, so last week we broke higher. Now this trend line might have fooled a few people. You can see the trend line goes back to February. So a significant trend line which was broken now. Admittedly, it did hold the first time, and I thought that we could turn lower, but we didn't. We came up and broke the trend line. But for me, the 100-day moving average at 72.65 at the time, and then this confluence of Fibonacci resistance around 72.80, 72.85, that was the real test for me. So we were getting short there with stops above 73.00. Now, admittedly, we did trade up to 73.02, but hopefully that wasn't too much. That wasn't enough, I should say, for you to be stopped out. And if you did manage to short up there, the first day, my sell level was a little bit lower, actually. I think it was 65.75, and then I revised it up to 75.85. But anyway, we did get a chance to short it, and then, of course, Friday, these shorts would have worked. So we're back below the trend line. The trend line isn't that relevant now. You can see it's not really doing its job. But the fact that we're holding below it, or we close below it, is more negative. So if you ran shorts over the weekend, which I wouldn't have advised, but if you did, it's looking okay. It looks like we can turn low. We certainly got overbought in the slow stochastic. So I do feel like we can go head to the downside. Obviously, we're going to have to see a clearance of 73.00 this week if we are to turn higher. But I do fancy a move to the downside. Kiwi New Zealand dollar versus the US dollar had a much stronger recovery than the Aussie dollar. So we got through some decent levels. Now this was a big level to me, 66.50, 66.60. It didn't really hold for long though. It really should have done. It was a good old fib level, 100-day moving average. But we pushed up through it. Once we were through there, bang, we went pretty much straight to the next target, or certainly to the next Fibonacci level. 67.90, 68.00. That was where we were getting short, and it looks like we reversed nicely. So if you were selling it up around that target and managed to run this down to, where did we get to? 67.25. So this looks a bit more negative. I think we can, we'll look for this. What's this peak? 67.26. Okay, there's good reason why 67.25 was the low on Friday. So obviously if we get below 67.20, we could be headed back towards 66.65 to 66.55, and we'll see if that level holds this time on the way down. Clearly the 68 area, 67.90, 68.00 area is going to be important resistance, of course. We can have a relatively tight stop on that above, say, 68.20. So if you are selling it there, it's going to be a pretty tight stop. Then we reverse into a long and look for a move up towards 69.00. So there's some scope for some decent moves. You can be looking at 50 pips profit if we do break, or if we do manage to catch a decent selling opportunity. Dollar yen, no question we're in a bull market since at least March. Pulled back into October, held good support with moving averages creating a nice bounce. Now, the bounce has really carried on again through the first week or so of November, week and a half. The question now is, can we retest the October high up at 114.54? Well, we reversed a little bit on Friday. I think it's the weekly chart that tells the story. So this is why this is such a big resistance level. It's not just because of the October high. The October high was a result of all this congestion from the mid to late 2017 highs. So I dropped them in there with these horizontal lines, and you can see, well, the trend line here is kind of relevant. I'll leave it on there, but it's really these horizontal lines are up around the mid 114 level. So there is a lot going on here, and there is no reason why we couldn't double top, and then that could be quite a big sell signal. Well, I won't try and guess what's going to happen. We'll just see what happens. But certainly the mid 114 area is going to be important. If we get there, we might turn lower and test this support down here around the 112.70, 112.60 area. At the moment, we're kind of in no man's land. We are overbought, so there is a potential for a dip. But if you asked me to open a new position right now, I wouldn't know which way to go. I'd have to wait for the levels. Euro yen hit a lot of congestion from the fibs, moving averages and trend lines here, and you can see these kind of tweezers top where we spiked up, sellers bashed it. Next day spiked up, sellers bashed it. So this is quite a negative little pattern here with the blue candle, these tweezers top and the big red candle. So I fancy a move to the downside. We should at least test the 500-day moving average, which is down here at 128.40, 128.30. It's a bit of a mess, this chart, and I'm just gauging in the very, very short term what I think could happen. We could get down here and then rock it, but clearly the resistance is in the 129.90 to 130.10 area. That's where you would want to be trying a short, and then you want to reverse on a break above, say, 130.25, and then that could clear a path. We could go up. We could certainly head towards the 131.00 area. Euro US dollar is a bit of a sorry old state. The euro really can't stage much of a comeback. Since this drop off from the end of September to the end of October, we managed a little bounce up to 115.00. Just looking at the short-term chart, I'll show you the 4-hour chart, why we topped up there. So, well, the 200 period moving hour on the 4-hour chart, but I'm going to add some. Okay, the 4-hour chart what shows why we topped up around the 115.00 area. We had the 38.2% fib at 114.96 coinciding with the 200 period moving average, and that really did work well. We reversed through there. So the question now is, can we hold 113.00, the low there at the end of October? Let's go back to the daily chart. I don't think we can. I think we're going to break lower, but don't sell it yet. Wait for the break. Trade what you see. Don't try and guess what's going to happen. Done that too many times. Let me just try and put the weekly chart up here. So the daily chart and 4-hour chart really doesn't look very positive to me. But when you look at the weekly chart, you've got this sweeping red 200-week moving average, which really has done its job of holding the downside in the last 3 weeks. So I guess if you want to do textbook trades, you'll be buying it down in the 113.00 area, but you'll be reversing quite quickly if we get through, say, 112.80 into a short, because this really is the only thing that's holding the euro US dollar up. Could be enough to engineer a bounce. I would be more keen if we were really heavily oversold, but really, you know, we couldn't even get up to these moving averages on the daily chart. So I think on balance, I think we will probably break lower, but I wouldn't be selling it yet. I would certainly be waiting for a break below the 200-week moving average to confirm that. If you feel like a bit of a gamble, you could buy it down at 113.00 as long as you're prepared to stop and reverse into a short position if that support is broken. US dollar versus Canadian dollar, I've said before that this is a mess, and boy, this is a mess. But this support down here did hold, so I think we got a profitable trade out of that, if I'm not mistaken. It overran our support by a little bit, but not more than 20 pips if I remember correctly. And the longs did really, really work. So I'm pleased I managed to find a winning trade in this pair this week, because it's blooming difficult. That doesn't make a lot of sense to me. Let's move on. I'm actually not going to show you the British pound pairs because they make no sense to me, and it's all about Brexit, and I don't like trading political events. So this is gold. Now that high 1230 area was just a beauty, wasn't it? Got a little bit fooled on this day when we spiked up to 1243. That reminds me of this day here. I know it was a Tuesday because I still remember it, when we spiked up through 1208. So we got a repeat of that on this one day, but every other day, that sort of mid 1230 area where we were selling it really did work. And even if you were just scalping it and trying to nick 5 points or so every day, that was a beauty. Eventually we turned lower, and I did suggest that we would do that eventually. Okay, we got down below the 100-day moving average on Friday at around 112.15, 16. We've tested really strong support down here at around 12. Well, I had 12.11, 12.09. I thought we wouldn't actually reach as far as 12.08. We nearly got down to 12.06, and I had a stop below 12.06. So, although the stop wasn't activated, we didn't exactly bounce off the support. So the question now is, do we hold to 12.09 on the open on Sunday night and then start to recover? Possible, but clearly a break below 12.06 will be negative. So we're really at a pivotal point here. You know, we can either bounce off the support, have a good recovery up to 12.15 and further, or we break below 12.06 and then it's good night for the bulls, really. I think we could head significantly lower. I'll have the targets on the sheets, but it really won't look good below 1200, certainly.